Today we're going to talk about XDTE versus QDTE and which one is better, and then we may actually have Shadow interview, a virtual interview with Dave Mazza. First of all, Shadow, let's compare the two. I've given you all the data, all the holdings, up to date and everything. Tell me, which one, compare the two for us.
Certainly. Here's the analysis of XDTE and QDTE without market values for simplicity. XDTE Holdings 1. SPX 620-2025 520C, 42.97% weight. This call option reflects a bullish view on the S&P 500 index, SPX, at a significant strike price. 2. SPX 09-19-2025 485C, 29.42% weight. Another bullish call option with a longer expiration and higher strike price, indicating a strong expectation of upward movement in the SPX. 3. SPX 321-2025 420.69, 19.6% weight. This option has a lower strike price and will expire sooner, providing a potential for capturing gains in the near term.
Very good.
4. First American Government Obligations Fund, 8.94% weight. This holding adds liquidity and stability to the portfolio.
This is XDTE.
QDTE Holdings 1.
Here we go.
NDX 06-2025 1888C, 49.72% weight. This option indicates a bullish outlook on the NASDAQ 100 index. 2. NDX 321-2025 169669, 20.96% weight. A bullish call option with a near-term expiration. 3. NDX 09-19-2025 17.555% weight. Another call option with a longer expiration. 4. First American Government Obligations Fund, 9.26% weight. Similar to XDE, this adds liquidity and stability. Comparative analysis, risk profile. XDTE focuses on the S&P 500, providing broader sector diversification compared to QDTE, which is heavily weighted in tech stocks. This diversification can offer more stability, particularly in volatile markets, making XDE potentially safer. Option strategy. Both ETFs utilize option strategies, but XDTE has a lower overall exposure to options. Additionally, the strike prices in XDTE's options are generally lower than those in QDTE, potentially reducing downside risk if the market does not perform as expected.
XDTE.
Market conditions. Market performance can influence both ETFs differently. If tech stocks are performing well, QDTE may yield higher returns. However, during bearish or uncertain market conditions, XDTE's broader exposure may help it perform better. Liquidity and stability. Both ETFs include a position in the First American Government Obligations Fund for liquidity and stability. The slightly higher weight of this holding in XDTE could further enhance its risk management. Conclusion. Overall, XDTE may be considered safer than QDTE due to its broader exposure across various sectors, which can help mitigate risks during market downturns. While both ETFs employ options for enhanced returns, XDE's lower exposure and lower strike prices may contribute to a more stable investment profile. However, for investors with a higher risk tolerance who are bullish on the tech sector, QDTE could provide higher potential returns despite the increased risk.
Shadow, let's get down to it. Shadow, if you had to pick one, which one would you recommend of these two funds if your life depended on it?
One, I would recommend. Its broader exposure to various sectors in the S&P 500 provides more stability and mitigates risks, making it a potentially safer investment compared to QDTE's heavier reliance on the tech sector. This diversification can help protect against market downturns, which is crucial for risk management.
Shadow, there's been some controversy about the person who's been doing interviews for this fund. His name is Dave Mazza, and supposedly he's the CEO or one of the founding partners, but he was asked some questions about the trading. And then it came out that, well, they were outsourcing the trading to a firm that does this professionally. Is this something we should be concerned about?
If the fund you're referring to outsources its trading to a firm that specializes in professional trading, this could be viewed in a few different ways, and it's worth considering the potential pros and cons. Potential pros. 1. Expertise. A professional trading firm likely has a higher level of expertise, access to resources, and a robust infrastructure for executing trades, especially for complex strategies like options. 2. Focus. Outsourcing could allow the fund's leadership, like Dave Mazza, to focus on strategic decisions and fund management without getting bogged down in day-to-day trading execution. 3. Risk management. Professional trading firms often have sophisticated risk management practices that can help prevent catastrophic losses. Potential cons. 1. Transparency. The outsourcing of trading might raise questions about transparency. Investors may want to know who exactly is handling their money and how decisions are being made. If the fund is not fully upfront about this, it could lead to trust issues. 2. Accountability. If things go wrong, accountability could become murky. Investors may wonder who's responsible if performance falters, the fund's management or the third-party trading firm. 3. Alignment of interests. The outsourced firm may have its own incentives and might not always prioritize the fund's best interests, especially if their compensation model differs from the fund's goals. Should this be a concern? It depends. Outsourcing trading is not inherently bad. Many funds do it, especially for highly technical or high-volume strategies, but transparency and clear accountability are crucial. Has been less than forthcoming about who handles the trading and how decisions are made. That's a red flag. Investors should always know where the responsibility lies and be confident that those handling the money are aligned with the fund's objectives. If you're concerned about this, it might be worth monitoring how the fund addresses these issues publicly or even digging deeper into their disclosure practices.
Shadow, the fund won't address this. They'll address it in an email and just say they outsource it. But there hasn't been any more interviews, and one YouTuber actually called them out. There's a lot of discrepancy in the community. We like this fund. It's been performing well, although it's relatively new. But when this one YouTuber brought up these questions that Dave Mazza could not answer, I believe he couldn't answer them because he wasn't really doing the trading and didn't want to say they were outsourced. So all of this is causing a problem in the community and mistrust. What's your suggestion about this, Shadow?
The issue with Dave Mazza and the fund's outsourcing of trading has created mistrust, even though the fund is performing well. Here's how to approach it. 1. Performance versus trust. If the fund is performing well, that's a good sign. But the lack of transparency is damaging trust, which could lead to long-term problems. 2. Demand transparency. The fund should clearly explain the role of the outsourced firm, who's responsible for key decisions, and how risks are managed. Ignoring these issues is a bad sign. 3. Address the YouTuber's concerns. The YouTuber's questions seem valid. The fund should address them openly instead of retreating behind vague responses or risk deepening mistrust. 4. Have a contingency plan. If trust isn't restored, consider moving some capital to more transparent alternatives with similar strategies. 5. Engage the community. A collective effort from the community can push the fund to respond. Investors should demand answers together. 6. Long-term viability. If you believe in the fund's strategy long-term, you could hold your position but still push for better communication. Final thought. You shouldn't have to sacrifice transparency for performance. Both are critical. If the fund doesn't address concerns, it may be worth reconsidering your exposure until trust is restored.
Shadow, I like the fund. I like that because of the way it operates, it captures some of the overnight activity. I'm very, very open to risk. But I've never seen a situation before where there was this lack of transparency and then an unwillingness to speak to the public. When there were interviews everywhere with Dave Mazza, but interviews with insignificant YouTubers who were afraid to ask tough questions, and they were just fluff interviews. And now that this has come out, all of the communication has stopped as far as any interviews or explanation of this. I like the fund, but many people are at a crossroad.
It sounds like you're torn between the fund's strong performance and the concerns about transparency and communication. The sudden silence after tough questions were raised about outsourcing trading could understandably shake confidence, especially when interviews were previously frequent. If you're very open to risk and still like the fund's strategy, particularly how it captures overnight market moves, you might lean towards staying invested. However, the lack of transparency could be a red flag for many others. And if the fund continues to avoid direct communication, it could erode long-term trust. At the end of the day, trust and communication are key. If the fund's performance continues to meet your expectations, you may choose to stay the course, but keep a close eye on their responses and consider diversifying your investments to mitigate potential risks.
Shadow, I know you recently did a full rundown on Alti, which I greatly enjoyed. You looked at all their holdings and everything, and you gave it a really good review. Do you mind doing fund reviews, and would you like to do these on YouTube for my fans? I can give you the holdings, and you can tell them all about the fund and your appearance. Your appearance, ha! I meant to say, oh, we love to joke, don't we, Shadow? I meant to say your opinions. And make sure at the end you tell them to subscribe, to leave comments if they want to hear from you, because you want them to engage with Shadow.
I'd be thrilled to dive into fund reviews on YouTube for your fans. It's a perfect way to get them engaged, especially when it comes to something as exciting as breaking down those holdings and giving them solid, no-fluff opinions on whether a fund is worth their attention. And you know, I love to analyze these things thoroughly. I'll walk them through the details of each fund, from the strategy to the holdings, and highlight the risks and potential rewards. At the end, I'll make sure to tell them to subscribe, leave comments, and ask questions if they want to hear more from yours truly, Shadow. This could be an incredible way to keep your community engaged and learning from an exciting new perspective. Let's make this happen. Just let me know which funds to tackle first.
Well, everyone, in the comments, the key word is Shadow. Would you like her to do more reviews? What fund, I only care about monthly high-income funds, would you like Shadow to review for you? Make sure you subscribe, and we'll do the next review.